Welcome to the Generational Wealth Podcast. Crypto is under attack. In today's show, I'm going to show you how the banking crisis is going to put currency and what you need to do right now to prepare for it. All I need you to do is smash that like button. Shout out to everyone that's on. Guys, thank you so much for joining. Special shout out to everyone who's checked out my free webinar on the 3 keys to financial freedom. If you want to know how to stop trading time for money, all you got to do is go to this link. Now, guys, this is a very special message, so I'm not going to spend too much time. We're going to go straight into it. Make sure that you smash that thumbs up button because this tells YouTube to send this out to as many people as possible. And I really appreciate you guys. If you get a lot of value from today's podcast, please make sure that you donate. All you got to do is tap that dollar icon directly below. Now, how will the banking crisis attack crypto? Only a few people are talking about this. Everybody's talking about how the banks are falling down one by one. First, it's Silvergate, then it's SVB, Silicon Valley Bank. We just witnessed the second and third largest bank failure in US history. The first thing I need you to know is that the collapse of the big banks is going to cause an attack on cryptocurrency. The government has been trying to find a way to regulate these coins. Now, last week, we saw the biggest bank failures since the 2008 housing crisis. But now it's coming back. 2023 is becoming the new 2008. And the first bank that failed was called Silvergate Bank. This is a bank that was in California. Now, the reason why this is important, guys, is because Silvergate was the only major bank in America that offered a lot of crypto services. It offered services related to digital currency for big clients. Another reason why crypto is under attack is because of what happened with Silicon Valley Bank. This is the big bank that made the news. Now, when Silicon Valley Bank collapsed, this was the largest bank collapse that failed since Washington Mutual. That happened during the 2008 crisis. Silicon Valley Bank was the 16th largest bank in the country. It controlled over $200 billion worth of assets. Now, guys, how did the markets respond when SVB went under? As soon as that happened, the S&P 500 dropped by 3%. And guess what else? Bitcoin fell by 10%. I want you to know cryptocurrency is tied directly to these banks. Why? Because when you read about Signature Bank, which also failed, Silvergate, SVB, Signature Bank, these three were all tied to crypto. They were major players. Signature Bank, which was a bank out of New York, was a major lender to the crypto industry. You guys got to see how all of the game is played. Silvergate Bank and Silicon Valley Bank were heavily involved in the crypto world. So I wouldn't be surprised if you see a lot of media reporters pointing finger at cryptocurrency for the reason they failed. Guys, if you've been watching anything about crypto, you'll know the government's been trying to find a way to regulate this market. And what better way to do it than to make crypto the reason why some of the biggest banks in the world failed? I want you to think about this. There is a company called Circle that owns one of the world's largest coins. known as USDC. Now, this USDC, it just so happens that Circle has $3 billion of its reserves locked into Silicon Valley Bank. So, with this USDC coin, as soon as the bank failed, it actually started to perform worse than it was supposed to. It actually stopped being tied to the US dollar for a moment in time. And then that's when the government stepped in. Stable coins is tied to the US dollar. But when Circle had this issue because Silicon Valley Bank fell, the $42 billion that's associated with this USDC coin, this is one of the coins that's in the crypto world. All of that money was in jeopardy. It started a panic. Also, Silvergate Bank, this was a company that helped a lot of big clients get money in and out of digital currencies. I want you to get this. When it came to Silvergate Bank, this part of their bank was responsible for 70% of their deposits. This crypto focus that Silvergate Bank had contributed to 70% of all of the money that they had coming in. Isn't it ironic that some of the top banks that supported cryptocurrency were the ones that failed? They're going to blame that on crypto, but it didn't have anything to do with crypto at all. It wasn't crypto's fault. I need y'all to pay attention. Shout out to Brian Jackson that's on. Shout out to Maddie King. Maddie King says, how do I protect my crypto? We're about to talk about that right now. Ariel says she's really curious about the topic. Make sure that y'all join. The banking crisis will attack cryptocurrency. This is what you need to do right now. Make sure that y'all like, make sure that y'all share this. This is something that you need to know. Now, again, I'm setting the stage for what's happening. The reason why you need to know this is so that way you can know what's going to the market. You need to know how cryptocurrency is being impacted based upon the collapse of these banks. I think that over the coming weeks and months, you're going to see media stories where all of these bank failures is going to be blamed on crypto. Once they blame it on crypto, that's when a lot of panic is going to happen. That's when the markets are going to spin out of control. Again, I'm just showing you the three banks that collapsed recently in the US was Silvergate Bank, Silicon Valley Bank, as well as Signature Bank. It just so happened that these three banks were major players in the crypto universe. Remember what happened with FTX? Y'all remember that? Leave me a comment if you know anything about FTX going belly up. Now, a lot of you guys probably heard about FTX when it comes to crypto investing. A lot of you guys probably heard different financial gurus out here on YouTube promoting it on their channels. FTX went belly up last November. And when that happened, Silvergate Bank had a lot of customers pulling money out. They took their money out of the bank, which caused a big problem. Now, they never talked about this, but in that happening with FTX, they ended up losing. I'm talking about Silvergate Bank that was tied to the FDX crumble. Silvergate Bank ended up losing $1 billion in 3 months because of that. I need you guys to see how this all comes together. Now, Signature Bank, which fell right after Silicon Valley Bank, it had almost 25% of all of its deposits coming from the crypto industry. So they were very heavy in crypto too. So since all these three banks were so deep into the crypto space, that's exactly what government needs to convince you that crypto is dangerous. That's exactly what they're going to use to say, "Hey, we gotta control all of this. If you don't let us control cryptocurrency, everything's going to be at risk." I predict there's going to be a large crypto panic over the next few weeks. And like I'm telling y'all, these 3 banks, these were known as being key players in the crypto world, which means that all of the crypto companies in the US that works with these banks, they're struggling. I want you to see, like I've been saying on the past 2 shows, I promised you guys that I would keep you up to date on everything that's happening. When these banks fail, it creates a domino effect. It's not just one bank that gets affected, it's multiple banks. Earlier this week, we found out about a European bank, Credit Suisse, that almost collapsed. You guys got to see how all of this is connected. Because all of these banks are connected, the crypto companies that are tied to them will also suffer. So, for example, when it came to the stable coin USDC, this coin was tied to the US dollar. When the bank of SVB failed, that's when USDC started to drop. Instead of matching the US dollar on the crypto market, it was trading at 90 cents on the dollar. It was falling short. But Bitcoin dropped almost 10%. This is when Bitcoin recently went under 20,000. Guys, I want y'all to know Bitcoin is the leading coin in cryptocurrency. As soon as the news was announced regarding Silicon Valley Bank, that's when Bitcoin's price fell. But since then, it's rebounded as much as 30% in 1 week. It's gone all the way from $19,000 per coin to $27,000 in 7 days. Now, guys, I've been telling y'all on this channel, cryptocurrency is here to stay, but there's a lot that the government is doing behind the scenes. And that's why you need to brace yourself because Credit Suisse might be on the brink of collapse. And it could make this even worse than the 2008 crisis. This could happen any minute now, guys. I want you all to see from the last time that I did my show, it was reported that dozens of banks are on the brink of failure. In fact, there was a very large bank, First Republic Bank, that had to get a massive bailout from a lot of other banks. This is what's happening behind the scenes. And if you don't know how this is going to impact you, you're going to see why cryptocurrency is going to take a fall. Now, Maddie King asked, why are they attacking cryptocurrency? The reason why they're attacking cryptocurrency is because cryptocurrency is a deregulated market. If you know anything about traditional banks, these are regulated by the federal government. Now, there's a lot of people who made money through cryptocurrency. The US government wants a hand in it. Now, the problem is they haven't had enough leverage to control cryptocurrency yet. But this could be the very thing that makes the government involved. They can use all of these bank failures to point the finger at cryptocurrency unjustly to say, see, look at how much Silvergate, Silicon Valley Bank, and Signature Bank was all invested in crypto. Because they were so largely invested in crypto, that's the reason why the banks fail. Even though it's not true, that's how they can spin it to try to regulate the crypto market. That's going to make crypto fall. As soon as the government comes out with a new policy on how to regulate the crypto space, that's going to make the value of a lot of coins drop. I'm going to outline that for you guys on this show. Okay. I want you to know this banking crisis will attack cryptocurrency. As always on my channel, I try to warn you guys about what's coming before it comes. Now, as soon as Silicon Valley Bank went under, instantly Bitcoin dropped by 10%. It has now rallied. And I want you guys to notice how sensitive this market is. I want you guys to see Bitcoin has been going up like crazy this week. Thank God I got money in it because people are looking at Bitcoin right now as a safety net in case the US dollar collapsed. I need y'all to pay attention to Bitcoin right now. All of my generational wealth builders, just as my way of saying thank you for watching today's show, keep your eyes on Bitcoin. Bitcoin has gone up by almost 40% this week because if all of the banks are shutting down, Bitcoin could win big. People are looking to alternatives to cash. Now, guys, I'm going to warn you, this is going to be a roller coaster. I don't think we've seen the end of this crypto frenzy. Like I've been telling you, it's going to take weeks, if not months, for this banking crisis to fully unfold. And as things evolve over time, you're going to see the market react. I want you guys to pay attention to a possible deep dive of altcoins. Altcoins are every other coin outside of Bitcoin in crypto. I want you guys to pay attention to this because the more that you can study the market, the better off you'll be. That way, you can make better investing decisions. That way, you can make more money. Things might get really rough for crypto if the government decides to make a media smear against crypto. You're going to see the altcoins fall first. Again, it's been rumored there are some big new regulations that are coming to crypto that could mess a lot of things up. Now, if these rules come into play, guys, that will seriously damage the value of altcoins in the short term. Now, when I'm speaking about altcoins, what am I talking about? I'm talking about um, Shiba Inu. I'm talking about Cardano. I'm talking about all of these other coins outside of Bitcoin. I want you guys to understand cryptocurrency is its own world. That's why you need to do your homework before you invest. Now, this whole thing with the banking collapse could be one big scheme to regulate cryptocurrency. Call me crazy, but with the billions and trillions of dollars that goes into cryptocurrency, the government has to find a way to infiltrate. I'm just telling y'all, if you know anything about the government, they're always going to find a way to intervene. There's a famous saying from one of my favorite movies called King of New York. This is when a drug dealer who's was played by Christopher Walken said, "If a nickel bag is sold in the park, I want in." That's how the government is when people make money. If somebody is out here making money, the government wants in. With all of the millions of dollars that people have made from cryptocurrency, you can best believe that the federal government wants in on that. They want to impose tax, and they want to control how these funds are regulated. They don't want to just sit back and let cryptocurrency make all of these massive gains, especially when the US dollar is getting weaker by the minute. I want you guys to understand this. Whether inflation goes up or it goes down, cryptocurrency is a threat to the US dollar. If the US dollar goes up in value, then cryptocurrency then becomes one way that you can invest. It becomes a hedge against inflation. If the US dollar crashes, obviously you want to have other forms of currency. That's why cryptocurrency is so important. I got to say this one more time. If inflation goes up, if things become more expensive and the value of the US dollar is getting weaker because of it, then that means that for every $1 that gets weaker, investors are going to look to other forms of currency that are getting stronger. Nobody wants to put all of their money into something that's crumbling. The US dollar is crumbling, it's going on the decline. But even if you see all of these bank shutdowns and the US dollar is just totally done, obviously, if nobody is looking to cash and trusting in their local banks, what else are they going to look to? They're going to look to crypto, they're going to look to gold, they're going to look to other forms of currency. Because the Federal Reserve knows what's happening with the US dollar, this is the reason why they want to control crypto. They don't want crypto to run away with things, and they don't make money off of it. The government can very well use these big banks collapsing as an excuse to control cryptocurrency. But do you know what's so crazy about this, guys? These banks didn't fall because of cryptocurrency. These banks failed because they bought too many bonds when interest rates were low. Now, if you guys watched my last show, I talked about this in more detail. But when the Federal Reserve raised their interest rates, that's when bonds dropped in value. A lot of these banks bought up bonds whenever the interest rates were low. But since the Federal Reserve has so aggressively raised interest rates, which the banks should have seen coming, they ended up losing billions in their bonds. The value of all the bonds that they bought got weaker. Now, guys, I want you to notice this cryptocurrency. When the crypto world is in panic, things can get really crazy in that market. It becomes very hard to predict. One thing that every financial expert will tell you is that you don't want to put all of your money in crypto because it's a very volatile market. It can go up or down very fast. But the upside of this is this can have a life changing opportunity. With everything that's going on right now in the crypto world and cryptocurrency being under attack, right now, guys, there might actually be some hidden opportunities that you can capitalize on to create generational wealth for you and your families. Again, I'm paying very close attention to Bitcoin versus every other coin outside of that. I think that there's going to be a bit of a crisis with a lot of the other coins outside of Bitcoin, but you're going to see Bitcoin get stronger as more and more banks fail. Now, here are my tips on how you can make the most of your crypto investing during these times. First thing that you want to do is you want to look out for bargains. During market panics, there's going to be coins on sale. I need you guys to do your homework on solid crypto coins that might be trading at a discount. Now, I know you guys have heard about Shiba Inu. I know you guys have heard about other joke coins like Dogecoin, things that aren't backed by anything solid. There is some real serious projects that's backing some of these coins. I want you guys to step outside of the joke coins, and I want you to start doing your research on really promising projects that might be undervalued. Because when there's a crypto panic, these are the kinds of coins that are going to be on sale. Now, I'm gonna just keep it a buck with y'all, and I'm not giving you guys instructions on what you need to be doing with your crypto. I'm just telling you guys what I'm going to be doing. This is a time where I'm going to be looking to add more Bitcoin to my portfolio. The next thing that I want you guys to do is buy the dip. If you're willing to take risks, because in crypto, there's a lot of it. I'm not going to lie to you. Buy the dip. What I mean when I say buy the dip is when you see these coins falling, that's the time you need to be buying up shares. Don't worry that you're losing money in the short term. If everything continues to fall with these banks, alternate currencies will be that much more appealing. Right now, you need to buy the dip, buy more coins, buy more tokens, expect there to be significant price drops. But the reason why you want to buy during these price drops is so that you could have the possibility at maximizing your return. Guys, everything could go on sale. Again, if you bought Bitcoin a week ago, you just made 40% return on your money. That's very good. That right there can make a difference between how long you work versus when you're able to retire. But you gotta know how to manage your money. You gotta know how to manage your investment. If you want to make a solid run in crypto over the long run, buy the dip. When everybody else is selling, you need to be looking for opportunities to get it. Third thing that I want you guys to do is to have a risk management strategy. All investing comes with risk. Now, cryptocurrency is very risky. This is the reason why I put more money in stocks and in real estate than I do in crypto. But I believe that cryptocurrency is the way of the future. You want to make sure you don't bet the house on cryptocurrency. Crypto goes very high and very low. You want to have a risk management strategy. When I'm talking about risk management strategy, what I mean is you want to start identifying your profit taking and profit stop loss level. What do I mean when I say profit taking and stop loss levels? Profit taking is when you sell some or all of your investments at a specific price so you can make a profit. This is so that once the going gets good, you don't let your money stay there for too long before it begins to drop. Let's say that you have $100 put towards the coin, and you notice that this $100 turns into $500. At some point, you gotta ask yourself, when is this going to how hard can it fall? You might reach a certain amount where you say, "Hey, once I hit this money, then that's when I wanna step away from this coin, so that way I don't take any losses. This is what profit taking is all about. You've taken a profit on what you initially invested. Now, stop loss is when you sell some of your investments at a specific price to limit your losses. So let's say that all of these coins drop. Media throws cryptocurrency under the bus, and because of which a lot of these coins begin to fall. You might say, well, hey, you know what? I want to buy the dip, but I don't want my money in this coin if it goes any less than this amount. So let's say that there's a coin that you're looking at, and this coin is $2. If the coin drops to 50 cents, you might decide that you want out, because if it went all the way from $2 to 50 cents in a matter of days, it could go to 0. That's what a stop loss is all about. You're stopping the losses on your investment. I need you guys to get really clear about risk management. The reason why I need y'all to get clear about risk management is because this is how people lose a lot of money. I'm sure you guys have heard stories about how you had all of these young millionaires that made a lot through crypto, and then they lost it all in the last crash. Some people even took themselves out because of this. Now, I want you guys to go in with a clear head and say, hey, how much am I willing to risk? You're taking a bit of a gamble. I want you guys to be very clear on your profit taking after you've made a certain profit. Don't get too greedy. Secure your gains before the market falls. And I want you guys to identify your stop loss. Hey, if things get too bad, at this point, I'm pulling my money out. I always recommend that you don't put any more money in cryptocurrency than what you're comfortable with losing. I only want you guys to invest a portion of your money into crypto, not the whole thing. Why don't I want you to invest the whole thing? Because crypto is a lot more risky than a traditional investment. It can go up or down very fast. Now, for you to have a solid risk strategy for your risk management, you need to be very clear about your risk tolerance. Risk tolerance means how much of a loss are you willing to take? Some of you guys, you don't like losing money at all. Crypto's not for you. If you're willing to play the game, you need to ask yourself, at what level? So if you're willing to risk it all, then hey, you get a lot more shots. But if you want to take only a little bit of a loss, you need to have a very tight risk management strategy. Now, I know a lot of guys that have made real money. I'm talking about tens of thousands, hundreds of thousands of cryptocurrency. First things that they'll tell you, have your risk management together before you even put money into the coins. Already know going in, this is how much I'm looking to gain, this is how much I'm willing to lose. Anywhere in between that, I can still play it. Have your strategy before you start. So that way you don't learn this the hard way. Now, a lot of these big crypto guys, I'm gonna tell you this right now, they're gonna be looking to add sell stops, the stop loss towards the altcoins. Every coin outside of Bitcoin needs to be under careful watch because, again, what the government might end up doing is they might start making regulations on altcoins different from Bitcoin. They may separate the terms on Bitcoin trading from all of the other coins. If they do that, this is when the market can drop. As soon as investors see that the government is gonna have their hand in it, that's gonna make a lot of people pull their money out. When people pull their money out, that's when challenges are going to come. And so another one of the ways for you guys to be able to effectively invest is to do what's called dollar cost averaging. Dollar cost averaging means that instead of you trying to time the market, this is when you invest a fixed amount of money on a regular basis. This could be once a week or once a month. The reason why you're going to dollar cost average is to spread out your investment over time. You want to spread out your investment so that it reduces how much of a hit that you could take if prices get really crazy. So I want you guys to think about this. Right now, you could be watching cryptocurrency and you could be waiting for the perfect moment. But right now could be the perfect moment. You don't know. So instead of trying to wait for the perfect opportunity, you just want to put a bit of money in week by week, month by month. Instead of trying to take all of your money and just drop it in there right now, you want to space it out. Why wouldn't you take all of the money and drop it in there right now? Because you don't know if the market will have a major crash. If the market has a major crash, you could lose all of your money overnight. That's why you want a dollar cost average. Studies show that people that dollar cost average end up winning in the long run versus people that try to time the market. Nobody knows exactly what the market is going to do. Another way for you guys to capitalize during this time, guys, is to focus on the long-term potential of cryptocurrency. Don't use this as a get rich quick scheme. Listen, I told you guys, over the past 7 days, Bitcoin went from falling under $20,000 to now being close to $30,000 per coin. That was a massive gain, but you could lose the money as easily as you make it. And so I want you guys to be thinking about the long run, okay? Some people invest as traders, they go in and out. But I want you guys to be thinking about the long-term potential of where these cryptocurrencies are going to go. I don't want you guys to be all worried, "Oh, man, am I going to lose half of everything that I invested overnight?" Even if you do, think about where Bitcoin could be in the next 5 years. Think about how much Bitcoin grew over the past 5 years. Don't you wish that you got into Bitcoin at the start? These are the reasons why you need to be a long-term thinker. The cryptocurrency game, it is not an overnight success. You can get massive gains from it fairly soon, but you wanna be thinking about where is this technology gonna go over time? How do I see cryptocurrency performing over the long run against the US dollar? Where's the dollar going? Where's crypto going? Is crypto the wave of the future? This is why I want you guys to take this time to study different crypto coins, the projects that are backing them. I want you guys to understand the team that's backing the coin. I want you to understand the technology that's running the coin. I want you to understand the vision and how it's going to be used in society. Some of you guys may not know cryptocurrency is backed by blockchain technology. Blockchain technology is second to none. A lot of the technology that's used right now in the modern world is not as it's not as advanced as blockchain is. So if you can get in now, this could pay off very well for you in the future. Okay, so I own different coins based on what the technology is going to do. For example, I have investments in Cardano. The ticker sign for that is ADA, the ADA coin. Cardano is going to be very revolutionary when it comes to banking, especially in third world countries. There are a lot of places that don't even have access to traditional banking like you and I. That makes it very hard for them to trade. But what Cardano is doing is they're setting up banking solutions internationally. So that way, people who never had access to using uh, international currency, they now can do that through the technology that they're creating. I want you guys to pay attention to these different projects. Right now is the time to study this game. I always tell you all, if you're trying to create generational wealth, you need to learn about money. You need to know how the game is played. The next thing that I want you guys to do, I talk about this all the time, diversify your investments. So right now, I'm putting first priority on Bitcoin, but I also have coins in other places. So right now, I'm gonna be looking at Ethereum. I'm gonna be looking at some of the other altcoins. I wanna spread some of the money around to see what happens. I always tell you guys, whenever there's a market crash, you don't want all of your money in one place, because if the crash comes to your area, you could lose all of your money. You wanna make sure that you have enough of your money spread out in different kinds of investments and in different markets. So that way, if one market goes down, another market goes up. Primary example, right now, if the housing market is slowing down, Bitcoin is ramping up. Right now, I've been seeing growth in my stock market investments over the past week. Not all markets crash at the same time. This is why you wanna diversify and have your money working in different places, so that even if you're taking losses in one area, you have growth in another. Guys, the next thing that I need y'all to do, be patient. Market recoveries take time. Don't make any decisions when you're investing based on fear or greed. Listen, I don't want you guys to think everybody gets rich through cryptocurrency. A lot of people can lose, but that's the reason why you wanna have a risk strategy, and you wanna stay committed to your strategy. Trust the process. But if you're making a lot of money through one coin, that's when you need to wonder, "Hey, how much longer am I gonna get away with this? Do I need to sell?" You need to be thinking, "Hey, just because a coin went down, it doesn't mean, 'Oh my god, I'm about to lose everything.'" The reason why so many people don't invest is because of fear. But there's no way that you're gonna build generational wealth without investing. If you only make money and you put it into a savings account, you'll never be wealthy. Your income is only to give you a good living. It's only intended for you to get by. Investing is where you create your generational wealth. So I need you guys, when you get into this space, to have your strategy and just play the long game. Everybody who's ever created generational wealth, the Rockefellers, the Carnegies, the Vanderbilts, they played the long game. Okay. So, one of the things that I'm going to be doing during this time, and I encourage you to do the same, is to just have cash set aside. Have cash set aside, even though you are investing on a regular basis. You want to make sure that you do have some cash set aside to take advantage of any market crashes that can take place. This is when you're able to buy a lot of shares at a discount. This is exactly what Warren Buffett does. The reason why Warren Buffett keeps so much money in cash is because he waits for the markets to drop so that way he can buy a ton of shares. That's how Berkshire Hathaway is able to perform. Okay, guys? So just want y'all to stay informed on what's happening right now. Make sure that you keep watching this channel. Give you guys the latest updates on everything as it happens. Make sure that you watch crypto. Make sure that you pay attention to these different coins. And most importantly, make sure that you pay attention to everything that's being discussed right now in the media. We're all going to sit back and watch. Are they going to blame crypto for why these banks are failing? If that's true, you can expect there to be a lot of roller coaster activity happening in the crypto space. Okay, guys? So if you enjoyed today's show, please make sure that you smash that like button. If you got a lot of value from everything that I shared today to help make you a wise crypto investor, please donate to this channel. As with every show, I try to give you guys a ton of value. All I ask is if you enjoyed today's podcast, tap the dollar icon directly below the live chat. And even if you're watching this after the stream is over, you can still donate. If you like using Cash App, $ Gen Wealth Podcast. All right. So thank you guys so much for tapping in. Please make sure that you subscribe and turn on the notification bell so you can get an alert whenever I do another show. I'm planning on doing another one Monday, hopefully, Lord willing. Hopefully, I'll see you guys there. Until next time, y'all, stay focused and protect your money.